Hey everyone, this is Kirk here again at Option Alpha. This is the members only video update for Tuesday, December 4th. So we had a good fill yesterday on the naked portfolio, one of the new ones to start off for January 2013. Can't believe it's already around the corner. But what I want to do tonight is just kind of go over some of the technicals here today on the chart so that we can, or at least so you guys understand at least what I'm looking at here, and then going forward, what kind of the game plan is for new trades and the adjustments to the current trades, and then where I think things will go for the end of the year. So as always, we are on the Option Alpha platform and the awesome charting feature that we now have in here for you guys. So I just put in the ticker symbol SPY. You can see that our current strike is already right here at 125. This is where our strike is for our short put that we just entered for January. So you can see that my target was to really enter it below this low here back in June. And I think that that's a pretty good area of support going forward. You can definitely see that we've already got to break through some lows around 135 and then 132, 130, and then all the way get down there to 125. So it is a hike from where we're at right now, considering how much the market's already sold off and is now starting to rebound. So I have some indicators up here, and let me just close out the CCI real quick. This is the MACD that I have up here. As always with my MACD, what I want to see is this blue line, which is the quicker line, cross above the orange. So you can see we actually got this buy signal right about the bottom of the market, right? Kind of the right next day or the very next day from the bottom. We got a very good buy signal, and that was valid for about 2 weeks. So you can see we still continue to see a very strong buy signal, increasing momentum. Momentum has clearly shifted to the top side. Now, again, as I said in the weekend update and on Monday, that I do think there's going to be some selling pressure here over the next couple of days, probably down to around, hopefully just right around 140 or so. If we start getting under 140 and continuously closing under that, or at least sell under that in a hard manner, then I think it's going to be prudent to at least buy some protection for this current position right now, just in case things go a little AWOL, right? We don't want to have our pants around our ankles if things get really crazy towards the end of the year. I do think the fiscal cliff, all that stuff is going to be resolved one way or another, and when that happens, I think the market's going to take off. So I think the stage is set for that. If we just take out MACD and then just go to these indicators here again and go to the CCI, you can see on the CCI that we've definitely broken above the zero barrier, which is in the middle of this brown range here. We haven't yet gotten into overbought territory, which is where I would start to get really nervous about entering new positions. You can see that back in September, we got very, very overbought. Same thing in July here, we got extremely overbought. And both times that we got that overbought, even back in March, we did sell off. Doesn't mean that the rally ended, but we just did sell off. So I think we're starting to get a very, very good signal here. We've had strong movements off the bottom. This is stuff that we haven't seen in about a month or so. So again, I think the stage is set to have a nice continuous rally here throughout the end of the year and into the beginning of January, which is why I do like this position despite the fact that the VIX is so low. Some other notable things that I'm looking out for here. USO has been a real steady stock lately for oil. I think the key with USO, and let me throw up MACD as well, because we traded USO before in the past, and you can start to see that MACD is starting to again slowly turn higher with the other indicators. I think the key for USO for us to be able to enter a position, and namely a put spread or something along those lines, would be just a little bit more confidence on the fiscal cliff and some of the Syria stuff starting, or not Syria, Egypt, Middle East, all that stuff starting to at least calm down a little bit more and not take front headlines. I think it's so volatile right now that anything can happen. I do think the volatility risk is to the upside, as always with oil, but we don't want to take that risk. I do think 30 is a good position. It's too close right now with what's going on. If we take a look at some of the other major ETFs, the IWM, you can see a lot of the same signals in IWM right now. I'm just so used to the other scrolling. But you can see a lot of the same thing with MACD and stochastics and RSI. Let me just throw up a stochastics here real quick. Here's an RSI. So again, you can see we've definitely made a move off the bottom. We've kind of really bucked the trend again here with IWM. Same thing goes with the DIA and the Qs and the SPY. the whole idea here is that we've started the next leg, and I do think that we're in it. There's going to be some selling pressure. There's undoubtedly going to be some people who are going to take profits. But for right now, I think this is a good area to start adding positions. I think going forward here for the rest of the week and for next week, the whole idea is just going to be to wait until the markets kind of back off a little bit before we start adding more put spreads. And if we continue to get these good signals and they don't flip on us, which would be the first point of concern, then I think put spreads are obviously going to be very attractive. I think more naked puts are going to be very attractive. Even with the low VIX, I think these are going to be very, very attractive positions going forward. Taking a look at the VIX here. Okay, so taking a look at the VIX here, you can see that we've continued to stay in this low kind of sub 20 area for the last 3 or 4 months now. And it's really been hard as an option trader, which is why I haven't traded as much, because we have no good signals until the ones we recently got that would suggest that we can sell puts. Selling calls was just out of the question considering how low volatility is. You cannot possibly get far enough away. So the reason I've been so quiet, and people keep asking me about this, is because sub VIX levels below 20 is very hard for put sellers, obviously because of the risk downside of the market, increasing volatility, and, which is the key here, and there's been no good buy signals. We've had constant selling in the market. So why would I sell a put in the face of this market that's just continuing to fall and fall and fall? Had I done that, had I forced trades in September and November for this month, we could very much be looking at positions that have sizable losses. So I think the strategy was actually good to sit on the sidelines, even though cash isn't always the best option. In this case, it probably turned out to be a pretty good option on the way down. From here, though, again, like I said, the signals have definitely turned over the last week or so. As long as they stay this way, then we'll continue to add positions. As soon as they start to flip over, we'll start to hedge, we'll start to protect, possibly exit trades, depending on what happens. So as always, we'll keep you guys updated, but hopefully you guys enjoy these. Definitely the new charts I think are awesome. Everybody loves the new charts. And as always with these charts, you can add your comments right below here and get some information. If you have any questions on the technical charts or any stock, just start adding comments and questions. I'll be continuing to monitor this all the time, and this is a new feature that we have here at Option Alpha for you guys. So hopefully you guys take advantage of this, use this. Please let me know how it works. This is great stuff, and I hope you guys enjoy it. As always, happy trading.